What's up traders, Tom here with another video. Today we are discussing the bull and bear cases for the stock market right now, and what are those sneaky insiders up to? Have they begun to dump the stock market without anyone else knowing? Stay tuned. So we'll start by talking about whether there's any cracks appearing in the bull's thesis on the stock market. So pretty much we know that the bull's main thesis, at least as we see it, is that the Federal Reserve is buying everything and therefore supporting or putting a floor in the stock markets. This particular article basically goes on to say if the economy becomes strong again, of course stocks will rise. That's always been true. If there is a vaccine or some kind of antiviral, stocks will rise. That could be true considering the leftover amount of stimulus that will still be in the economy. So the faster that happens, the better it is for the bull case. And then of course, if we have another crisis where this virus comes back, or if the economy becomes weaker again, that the Fed will step in. I'd probably also add on to this for the bull thesis, the idea that it's going to be quite easy for companies to restructure coming out of this crisis. They'll be able to effectively fire people that they may not have before. And while that's unfortunate for unemployment and unfortunate for those people, it could add to the profits. And this is kind of a win for corporate America in that aspect. I think they'll do it here in Australia as well. So for any Australian watchers, things like the banks, I'm sure they'll get around to doing this. And I've had that kind of thesis for a while with the banks in Australia, that they're going to fire a whole bunch of staff and then they were going to claim it on the Royal Bank Inquiry here. But in this case, they might just be able to say, well, this crisis was too much. We've got to do this. So we saw that with banks the other day announcing that they were going to cut staff. It could happen across the board. And it'll bring an important message that we've got later on in this video. So I think this is where the cracks start to appear. And it's pretty clear that we are seeing Jerome Powell come under pressure and scrutiny just in general for the moves the Fed have made. We need to think, well, these trillions of dollars have become the new billions. It's insane to think that $1 trillion is like nothing during this crisis. And that is the concern that I think many people are shifting to. So one thing that's important, I think the most important thing here is we're not actually increasing the dollar volume of things we're buying. We're just shifting away from ETFs towards other forms of indices. Well, that shouldn't be that bullish or as bullish as it was initially looked at. So it's important to think about that as well and then think, well, why we keep going that much higher off that fact? Then the next point, if the market function continues to improve, then we're happy to slow or even stop the purchases. They've shown that they've changed the purchases per week over this crisis, initially starting with, of course, a massive bazooka and then bringing it down. I don't think this is necessarily going to be a thing where they'll say, oh yeah, we're going to stop straight away. And then if the market crashes, they don't just start it up again. So it's not that important. But the last point, and I saw this highlighted when I was watching the speech, I don't see us wanting to run through the bond market like an elephant doing things and snuffing out price signals and things like that. Interesting point, interesting answer. So they're obviously considering where they're going to have to get long term. Now, I'm pretty sure they can never stop any of these purchases long term. But if they start to see, let's say, the stock market go just insanely high, they will control it, or you would think they're going to control it. And maybe insanely high is anything past a certain percentage past the previous peaks. Is it insane? Sure, many people would say that, but it's interesting there. And of course, the balance sheet beyond 10 trillion, how much can they really hold? I feel like they can hold a little bit more than some people do think. So is the stock market in la-la land? Well, according to not actually Warren Buffett, because that's not who it was, but according to Kevin Smith, basically he thinks so. And I just want to bring this chart up again because it shows the difference between margin estimates, as in profits, and the last price. So we've seen a very big disparity, and we saw this on the channel the other day. I think it's worthwhile considering to continue look at this chart from a large time frame perspective. Very important chart, very interesting. So what are the insiders doing in terms of the stock market sectors? What are they actually purchasing and what are they selling? Well, insiders, of course, were purchasing pretty heavily during the March point of this crisis. But they've moved now from the energy sector, and it looks like they're now getting into the financial sector. And it makes sense because the financial sector is probably the most beaten down value sector. We spoke about it before that if we are going into a recovery here, for the first 3 months, so that's 3 months, the value section of the stock market, so that's the beaten down companies, generally do the best. And do remember, some of these financial companies, they are in much better balance sheets than they were during the GFC and other things. They also will be heavily supported by the Fed because they're the companies that the Fed needs for them to survive. They have to have them survive. So it's an interesting point and something interesting to think about. Here I've got openinsider.com, and this particular website shows us the daily purchases/sale filings for officers and directors. So a huge spike over here when the March crisis was on and they were purchasing out of control, and it makes sense. They always purchase, and people with big amounts of money will always purchase during the dips. They know that over the long term, they can make more wealth off that. The other thing that's interesting is that they've resumed their sales recently in the June period. So since June, they've actually started selling and dumping some of their stocks again. So they obviously feel pretty comfortable with where the stock market's at, and they've begun their selling momentum. In terms of buy-sell ratios are at a pretty low point, 0.34 here. This is from Guru Focus. So we have buy-sell ratios obviously becoming massive during the March period. Pretty large during April. People started to realize that the Fed was kind of going to control the market in April. So then May was fairly strong. And then we've seen the lowest point, even lower than Feb, in the last month. So in June. And that's interesting because that means that people are starting to slow down their purchases from the side of the richer investors and the insider traders. So activity is slowing on their side. Another great website that you can go to just for your own advantage is finviz.com. And you can see here all of the different sales and buys and what companies they're from. And there's a whole bunch of different websites you can go to get these filings. But it is very good to follow them and have a look. Can you trade off them? Not so much, but you can get a little bit of idea on sentiment, and it can help you, I guess, make a better decision on what you want to do. So that brings me to my next point, and that is the US stock market overvalued right now? Well, by many metrics, it totally is. And of course, this equity overvaluation composite indicator is showing the highest reading ever. It's not like any other indicator really. And in terms of most indicators, they are showing firsts for so many things. That's what makes this such a unique trading environment and such a scary trading environment for many, an investing environment, because we're seeing so many firsts. But I think the thing that I'm going to talk about a little bit on this channel is how US equity markets have acted over an election year. I've seen many people in the comments mentioning that they expect that the market is going to be up because it's an election year. And actually, they would be generally true on that fact. In fact, statistically, it's incredibly likely that it's going to be a positive year during the fourth year of a presidential cycle. It also makes sense because, of course, Trump is pinning a lot of his hopes on the health of the economy and mostly the health of the stock market. How good is that stock market and how strong is the stock market? He mentions it many times on Twitter, and not to get political, but he definitely does care where the stock market is each day. So I think the election year is going to come into it a lot, and I think that we're going to have to see what the Powell and the printing press does over the next 12 months. It's going to be volatile. It's going to be good trading opportunities. And it leads me into what I think is really important that people consider. And I've said it on this channel before. There are other trading instruments. Remember, trading's different to investing. Trading instruments that you can look at. And one of those, of course, is Forex or currency. So I just want to bring up this really nice pattern that happened. And we talked about this in our Discord room. And we talked about the pound yen, and it was a really great pattern. But this is clearly a head and shoulders. It's a very nice head and shoulders. And you've got the left shoulder, you've got the head, and you've got the right shoulder. What makes this really great is that it's had so many technical reasons to trade it, but it was a very strong, nice break here in terms of the confirmation below the neckline. At the same point, it gets through that 50 EMA we talk about all the time, which means it's breaking a key point. And I talk about filling gaps a lot on this channel. So I talk about how sometimes you see a level. Now, previous resistance broke out, and in fact, there's actually an inverse head and shoulders on this one as well to the buy side. But when that happened, look at the massive gap that it left. There was a little bit of resistance over here, but it didn't even think about that. So it's not one of those things that you're going to say, okay, I'm really concerned with this level. What you're going to be looking for is you're going to be looking for the length of the head to the neckline. But more importantly, during times of volatility, you need to take your trade off slightly earlier than that. So if your expectation is back down to here, did it eventually get there? Sure, but it doesn't always. The best thing to do is go for around 70% of what your expectation is. And you usually won't be wrong, because the thing is that the markets will stop before the self-fulfilling prophecy. The other thing is there's always usually a conservative entrance point. So we've got this conservative entrance point over here where the neckline becomes role reversal and sells off from. And we've seen weakness since that point. And there's a whole bunch of cross-currency analysis that we could do to show you that. And we will do things like this on the channel from time to time. So the reason I want to bring up the pound yen and that head and shoulders is because of this break as well, leading into everything. The pound yen, obviously we're talking about the shorting side, but remember we had that resistance that was broken. Very strong resistance is very key when it comes to technical analysis. If you have a level which has been failing to break and then it breaks through it, it means that something has probably fundamentally changed behind. But on top of that, you are seeing money flow coming back into the market. This can be the stock market. This could be anything. It could be a particular stock. If you ever see this many touches to a zone and then it clear breaks that zone with a nice big bullish candle, it usually means that we are on a serious trend. And look at how fast that trend buster happened. It went very, very quickly to the expectation. And you can always see where it's going to go, because if we take the length here and then we pick that one up, look how close the market got to the exact length of the previous swing into the resistance was then the self-fulfilling prophecy. But notice how it stops slightly before what the expectation is. This is what happens all the time in the stock market. It happens all the time in the currency market. It happens all the time in commodities markets. It's just you have to be patient. And I think patience is the biggest key for investors. Remember, we talk about no FOMO on this channel if possible. And that's because there's always an opportunity around the corner. We hope everyone enjoyed this video today. And remember, knowledge is empowering, but only if you have the capability to act on it. Thanks everybody. Remember to subscribe and hit that bell if you liked the video. Give us a thumbs up and support us. And of course, happy trading. Bye.